GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to another weekly webinar where we preview the price action for the week ahead in Forex markets as well as commodities, indices and a bit of crypto. The idea here is to go through 8 of our most popular assets, but if you had any questions on something else, please drop a comment in the video. We can always talk about it next time. Otherwise, happy to hear your feedback or just click the like button if you're enjoying the video. That really helps. Okay, so let's start with the euro dollar. Let's start with Forex. So we've been talking for a while about this kind of slow grinding downtrend, and finally last week we got that breakout that we'd been suspecting might happen. We talked about the falling wedge in last week's webinar, I believe, and falling wedge patterns tend to be bullish. So I've taken that wedge pattern, the trend, you can see the lower trend line here, I've removed the top one. It's not so significant now. We're obviously in a different phase at this point. This is the 4-hour candlestick chart. So what's happened is that we were contained under the 60 level on RSI for a while now. Had a first little attempt to break it there, didn't, and then finally pushed up to the 70 level. So to me, the way I interpret that is that now the market's strong enough to get overbought, strong enough to take out this former area of resistance here through 1895, I think it was very close to the 1880 rather. Broke out through the 1880 resistance, but if you see where this decline here started to accelerate, you know, it's really from this kind of consolidation phase here, and so that's where we got to. We got to the top of that consolidation, these three highs through here, and we've rolled over again. So the question is this just a slightly larger bounce than we had been having, and does this downtrend resume? Well, that's quite possible, and I think a lot of people will be trading that way, assuming, looking at this down sloping price action, that yes, this was just a better, bigger bounce to be able to sell into. That may prove to be right. The way I interpret things here, though, is that the price is above the 20-day moving average. It's gone overbought on the 4-hour chart. So I'm expecting this trend to have turned higher. An interesting piece of data from over the weekend that you may have read in the daily article from Monday, that speculators, we're talking about kind of hedge funds and things here, who have to report to the CFTC. And this is just futures and options. It's not spot forex that we typically trade on the over-the-counter market, but they have turned net bullish the dollar. So if they've turned net bullish the dollar, that means they expect euro dollar, the forex pair that we're looking at here, to drop. So that's something to bear in mind in terms of the kind of the fundamentals in the background. For me, the way I'm thinking of that in my head is that's a long-term phenomenon. Hedge funds and things are now expecting the dollar to rise. That would suggest they think the euro is going to fall, but it's already fallen for a while. So I think they're just kind of catching up with the most recent price action, and I think that's not necessarily something to worry about for now. And I think we can still get a push higher, potentially even test the 2020 level again in euro dollar, despite that change in the CFTC data showing speculators have turned long the dollar. But it probably means that, you know, that rally can only go so far. Am I expecting this most recent price action that's bullish, am I expecting it to retrace all the way to these peaks? Well, I'll certainly trade like it's going to do that until I see a reversal, but probably it's not going to do that, given that you know, the hedge funds are expecting lower prices here, tend to want to follow what the big whales are doing, what the big fish are doing. More short term in terms of this particular scenario. Oops, I meant to do the other. Zoom in. So this is the resistance that's been taken out. It's popped down through the resistance again. You can see right now it's basically bounced off this peak here. But I suspect it can probably come down to, it was kind of this area. I've drawn this line in, but it's sort of a zone through these peaks here, and maybe as far as this one. And I think somewhere near this 20-day moving average, the price, if the price gets back down to here again, because, you know, again, sellers think it's going to go lower, this is where whoever pushed it up like this far, whoever created this candlestick here with a lot of buying power, I believe that was after the Fed meeting last week, then they are going to step in again at similar prices, I think could happen. And so positioning for that potentially. If we drop through this level, and then again we drop through, if we remind ourselves of the big trend situation, we drop through this long-term rising trend line through here, then that's when this, when we take out this rising red trend line and potentially a longer-term head and shoulders pattern here, when we take out that, that's when we start seeing this long dollar situation really start to kick in. But it seems like we're not there yet, and maybe if people have started going along the door and shorting, you know, the short-term traders can squeeze them a bit higher for the time being. It's a bit of a longer explanation on euro dollar than I'll do for the other ones. I just wanted to explain that situation with the CFTC data. That one thing I did. I mean, again, I said this in the daily article, but this is the first time in 16 months that that hedge funds, etc., have turned bullish in the dollar. So it's the first time since the sell-off in March 2020 that hedge funds have turned bullish to dollar. So it's interesting, but you know, we're going counter to that in our short-term trading, but we're ready to consider it as part of our strategy moving forwards. Okay, let's jump over to the British pound, and you can see some really good strength in the British pound recently. And similar situation to the euro, after ages of downtrending, so below the 20-day moving average, you're not going overbought on the 4-hour chart. Finally, it popped overbought, and it's just come off from those levels. But still remains a bullish chart, and it's basically testing that former resistance. And so I think there's a good chance that we do drop further below this resistance, but still, let's just go on the basis of resistance turns into support. You know, I think it's reasonable to assume that it holds at 139. You know, obviously we got a little sell-off from 140 basically. Here's the 140 level here. Price didn't quite get to that peak. You can see 140s there, and we just sold off a bit from before there. So that's sort of natural that there will be some profit taking before 140. If we assume this uptrend is continuing, then we can get, you know, maybe the buying resumes, and it's already, you know, we had two periods of heavy declines, and now we've steadied. And so, you know, what we obviously want to see is just the bounce back again. You know, if it takes out these lows and it drops through this demand area, then there's some other possibilities, which is basically the next round number down towards 138. And you really do want to see it holding around 138, or I think then we'll have to start thinking of this as a false breakout. So similar situation. You know, we're looking dovish. We're looking bearish on the dollar at this stage, and looking for more pound strength to continue while we're above this 20-day moving average. It's a good point actually that the 20-day is down to 138, so obviously it's an extra layer of support if we do drop down to that level too. Switch gears to a dollar yen. So this is just a major level of support here. You can see that this zone has been working for since the 20th of May. We're now into August. So you know, we're talking 3 and a bit months of support here. So you know, we tried to break through it once, didn't work. Came back up to this peak and sold off right from the peak, and now we're back here again. It does look like this is eventually going to give way, this support here, and that would be in line with the pound and the euro accelerating. If this support does just hold though, and we can't get through it, then obviously again that's then we'd think that maybe the bullish trend that started to emerge here, you know, we're just having a pause. The trend turned bullish, pause, and then resumes. But overall it's been a pretty choppy market at dollar yen, and a little bit tricky to trade. We had a couple of good ones last week where we called the turning points at the highs. That's one of the good things about range trading is it's a bit more clear where the highs and lows are. It doesn't always work. Sometimes you get a breakout, but if you are able to just sell at the former highs and buy at the former lows of a sideways movement, it's very straightforward trading. And that's kind of what we're dealing with at the moment. Obviously people are buying off the lows again at the moment, hoping for a move back up to the highs. I suspect at some point we take out the lows. But to probably based on this candle's experience, you want to see a good daily close below this zone. And 109 is down here, so even 109 you've got some potential support, which is basically what worked last time. So even a close below 109 would be really what you need, but then you face the risk of kind of a range trading bounce again. So again, tricky trading. Let's move away from Forex into the metals market. So this is gold. We obviously had a good rally last week in the price of gold as the dollar gave way, but it just found resistance straight away and rolled over from that peak. This was the kind of consolidation that we had. So, we rallied up, pulled back, but this bounce didn't really go any further. This is where, consolidate, rally, pull back. Okay, a bit of a steep pullback, but you'd want this rally to continue and take out this former high, but it didn't. We just saw some heavy selling in there, and it just consolidated near the lows, and you would assume that it would just take out the lows. At least I did. I assumed, but it didn't. It broke out to the top side. So now it's back to this range again. We've got the 20-day moving average. We're at 1808, but 1800 obviously is the round number. So we've got all those things in our favor, as well as the fact the RSI remains not oversold, but it keeps pushing into overbought territory. So that's more of a kind of buyer's environment than a seller's environment. So possible that just having failed here, we end up just rolling through this support again. And if that's the case, fine. At least we know the situation then. We know we want to be sellers underneath this support. But for the time being, we're going to assume this kind of more positive momentum continues. Interesting that last week, if you remember, I used this low here and just said, well, it wasn't perfect because we had these two false breakdowns, but it did work again here. Well, it actually worked almost to the pip, which is it's unusual to choose a kind of slightly funky support as I did, and then it just worked perfectly. But that's again, you have to kind of recognize where the noise is in the market and where the kind of true support is. And in this case, it kind of proved to be correct. We pulled back from that area, but after such a strong rally to get to it, we're now consolidating at the previous peaks. And if we can hold this purple line here at these previous peaks, then that would just be a kind of rally flag and rally up potentially back up to these these highs through here again. So it's a downward looking market, but shown a little bit of strength off the lows. Back up to the big 25 handle. So, potentially there's some chance here in silver, and obviously if gold does well, silver should do too. Onto the oil market. So oil continues to be strong, but we did have a bit of a sell-off into the end of last week, into the start of this week. And that came ahead of this previous peak here. I think we can work on the basis that this resistance turns into support, although it has already worked once. You can see when we first broke out, we pulled back to it. So it's not completely fresh, but we're pulling back to it now. If this resistance doesn't work, then we've still got the kind of a fairly area of, we've got this whole consolidation area beneath, which maybe the price just drops into that and then rallies up from here. The trend is still higher. We've on the bigger picture, if we pull out to the daily chart, again, this is our major resistance, which turned into support. We've rallied off it, so all looks fine from here. But obviously, we had a couple of sharp weekly sell-offs, but we seem to have come back from it. So again, overall market very strong, obviously, but I would imagine if we are looking for a market reversal, you would think that we at least need to test the previous peak around 76 first, or whatever it was it 77 even? Yeah, 76 and change, to form some sort of double top-ish type pattern, or even a new peak, and then eventually something like a head and shoulders. Just to fail at this level, so we're at 73, almost 74. We're still $2 away from more than $2 away from the highs. I'd be surprised if this ended up being the top right here at this level, but but obviously that's certainly possible. Or it could just be that we're now into the summer. We've had a strong rally, and now we're just getting a bit choppier. And we, the price gets high enough, and sellers come in, even though it's not, even if they're not positioning for a top, they're just selling the strength. So that you've got to factor in the summer trading here, but still, let's stick to our time frame. We're just looking for the next week, and the trend is bullish. But if we break down through this area here, then it would be. It'd be harder to be looking for dips to buy, I think. Be looking at this overall situation and thinking, well, it's more like a choppy range, and you'd probably be waiting for prices to come much lower to try and buy off the lows again. S&P 500, so this is still a pretty steady situation on the daily chart. You can see just steady, nice uptrends with the occasional dip to buy into, which people obviously have been doing. We're in a bit of a consolidation. We dipped down to this peak here. We consolidated in this area. Yeah, you gotta assume that the trend just breaks to the top side here. I mean, let's not overthink this. The trend has been so reliable. Let's assume we break to the top side, and when the next time we do get one of these kind of sell-off moments, then potentially this demand area here could work, because it will coincide with this rising trend line, depending on the timing of when we get there. If we actually broke that rising trend line, then this little demand area down here, depending on, again, the timing, potentially could work as a buying opportunity. Switch gears to Bitcoin. So yes, I mean, we're struggling at the 40,000 level. You could say that 40,000 obviously is the big one, but we got up above 41,400 on Sunday, and tested our highest levels since May, since the if we remind ourselves of since the big correction happened. So that was the big drop off from the peaks, and this has been the consolidation, and obviously we're trying to bottom out here, but haven't quite got the enthusiasm to pull it off. So again, sellers drove the price back down after this breakout, and it's happened a few times. When do we start to get worried again? Well, I mean, I think we can look at these lows. That's a fairly well established low in here. If you are looking for short-term opportunities to actually, sell from the top of the range, we've had one kind of bearish looking outside cloud, bearish dark cloud cover type pattern. If we took out the low and then rallied back up, that could be an interesting opportunity to sell the price lower. And here, if we look, we've actually had some bearish RSI divergence at this point, so made higher in the price, but we failed to do so in the RSI. So potentially a sell the top of the range scenario happening here in Bitcoin after a fake out. Normally it's a very bullish market, but a bit choppy at the moment, so potentially some bearish possibilities there. If we get, if that doesn't work and we push up to overbought again, and we get through 41,500, then you start looking towards the breakout again. But for the time being, it looks like a false breakout. All right, so that is it. Good luck trading this week. Some interesting possibilities out there. Like I said, we've got this whole scenario of of positioning in the dollar turning net long. So more speculators, hedge funds, etc. out there wanting to buy dollars and are buying dollars than they are selling the dollar. But interestingly, the trend in the bullish dollar trend over the past few weeks looks like it's actually reversing a bit at the moment. So let's see which factor plays out over the next week. But I think we've got some interesting trends coming up either way. All right, thank you very much, everyone. Good luck trading this week again. Signing out for today.